Hi folks, Scott here, and this is the wrap for Monday, July 8. So let's take a look at a couple of daily charts here. Here's the S&P 500. It's broken its trend line. Would not be surprising to see it come back and test this trend line, which would probably coincide roughly with the 50-day moving average. We also have an unfilled gap that was formed today. Put in another 10-day high close. And I showed that data, which you'll see in a moment, to our members this morning. But it's a 10-day high close that did not make a 20-day high close. And just a geek note, I use the cash indices for closing levels because they're more accurate than the futures with all their rollover issues. But still, 10-day high close here. That was actually more than a 10-day, about an 18-day high close. That was not a 20-day high close. So I'm going to show you the results of fading gaps following this particular pattern. With the addition or additional clarification of it must have formed an unfilled up gap. That's what we had today. An unfilled up gap, 10-day high close, not a 20-day high close, and above the 200-day moving average. I'll use Gap Trader, my back testing tool. It's available on our website if interested. And there you go. So several things stand out actually. One, in general, expect consolidation after such a scenario, historically, at least in the morning, enough so to get gap filled 21 out of 24 times historically. That's an 88% win rate. Second thing that stands out is that odds appear to favor a gap down. Now, this is a terribly small sample size. This is really borderline. Anything less than 20 is pretty much purely speculative. Anything more than 20, I guess start giving it a little bit more weight, since 30 is sort of the minimum level. Especially, though, I will give it weight if it makes sense. And the market basically is short-term stretched, right? The highest close in 10 days. But still, we're at least in somewhat of a downtrend as defined as we're below where we were 20 days ago, or at least the highest close of past 20 days. So, makes sense, maybe a little profit taking, a little bit of weakness overnight, and that's what this shows. So 2-to-1 odds of gapping down based upon this one small sample size study. But it's interesting. Other thing that stands out is, although it's a very high win rate, 15 of 17 using an end-of-day stop, not something I recommend, but a good place to start your analysis, hasn't made any money until you consider that there was one big loss that erased, that would have made this all very profitable. We will avoid that using our MTG stops, which are volatility-adjusted stops. I use 30% of the 5-day average true range. Gap up looks pretty good, just a little bit less likely. So we'll see. As always, I'll defer to our gap guides and my summary analysis that I include with our morning worksheet and my morning comments each day. But maybe we're due for a little consolidation here. All right, let's talk about today. Whoops. I'll get to that in a second. Let's look at first the worksheet, which is a summary of all the gap guides for basically all three systems and all 8 indices. And it's averaged up, and this is what we showed over the weekend. You can see a gap above the highs was not terrible, but not overly attractive either. 58% win rate using our MTG stop parameters, and a profit factor of 1.1. So anything more than one's made money, anything less than one's lost money. So for all intents and purposes, that's sort of a scratch trade historically is the way I think about that. And then most of the markets on Fridays closed right at the high, so this really was not in play, unfortunately. Now, in terms of unique day factors, today was the Monday post-jobs report. That's generally been sort of a neutral setup as well. And let's see, unique patterns. Today was Friday formed a WS7 day, the widest spread or widest range day of the past 7. When above a 10 and 200-day moving average historically has been very attractive. So that's one ray of light there. Here's how I summed it all up this morning with some additional analysis actually before I summed it up. As I've shown a couple times this month already, this particular market configuration, the 50-day moving average above the 10 and above the 200, generally favors shorts historically. 10-day high close was not a 20-day high close above the 200, generally a very good setup. And again, that's what I just showed you in my tip, except I added the fact that today's gap did not fill. And let's see, up gaps after closing above the 50-day moving average, following at least 2 closes below it. Right? Does that make sense? What we're trying to test here is the fact that we'd consolidated, been below the 50-day moving average's blue line for at least 2 days, and then we closed above it. Does that strength beget more strength, or do you get a reversion to the mean? And what the data showed It was 11 of 13 wins. Small sample size. Just like I said, though, anything less than 20, you got to be real careful. And sure enough, guess what? Today's gap did not fill. Today was a loser per these standards. So I said the gap guys were overall neutral. Unique pattern data mostly showed positive swap gaps. Overall, guys are just too weak for me to overrule them, and I'd wait for the range guides. That's what I did. And let's see, the Russell did not fill, the S&P did not fill. The blue line is a gap fill, by the way, if you're new to watching my videos. Dow didn't come close, and NASDAQ did fill, but finished with a perfect doji. So NASDAQ was the anchor of the markets today. We finished up barely. You would have been stopped out because the stop was, if you used a 5-point stop per our gap guys today, which is 30% of the 5-day ATR. But you would have been buffaloed basically because then it rolled over and only finished a little bit against you. So it was a good call to not fade today's gaps. The range guides, which I'm not going to show you, showed nothing remarkable in any direction today. And that's a good thing because I'm not sure there was a single winner anywhere. I don't see one. So when they're mixed or not showing a clear edge, you're just better off leaving them alone, has been my experience. So a quiet day, back in the saddle after a great July 4th weekend. I hope you had a great one, and we'll see what tomorrow brings us. And that is the wrap for Monday, July 8th.